The global economic landscape is shifting. A group of nations, collectively known as BRICS, is rapidly gaining prominence. BRICS stands for Brazil, Russia, India, China, and South Africa. These emerging economies are playing an increasingly influential role in the world. Their growth has been fueled by a combination of factors. These include abundant natural resources, growing populations, and ambitious economic reforms. BRICS nations are challenging the traditional dominance of the West. They are forging new partnerships and creating alternative systems of trade and finance. This shift in economic power is having profound implications. One of these implications is on the prices of precious metals, such as gold and silver. The rise of BRICS is not without its challenges. These countries face issues such as poverty, inequality, and political instability. However, their economic potential is undeniable. As they continue to grow and develop, they will undoubtedly exert an even greater influence on the global stage. The world is witnessing the emergence of a new economic order. The BRICS nations are at the forefront of this transformation. BRICS nations have been outpacing developed economies in terms of GDP growth for over a decade. This impressive growth has been fueled by a number of factors. China, the largest of the BRICS economies, has experienced unprecedented growth. This is due to its manufacturing prowess and its emergence as a global trade powerhouse. India, with its vast and young population, is also on a path of rapid economic expansion. Brazil and Russia, rich in natural resources, have benefited from the global commodities boom. South Africa, the smallest of the BRICS economies, has emerged as a key player in the African continent. This robust economic growth has translated into increased purchasing power for BRICS citizens. This, in turn, has led to a surge in demand for various goods and services, including precious metals like gold and silver. The thirst for these metals is being driven by several factors. These include cultural traditions, investment opportunities, and a desire to hedge against inflation.
BRICS nations are not only transforming the global economic landscape through their impressive growth, but also by actively reshaping global trade patterns. They are increasingly engaging in trade amongst themselves. They are also forging new trade relationships with other developing countries. This has led to the emergence of new trade routes. This reduces the reliance on traditional trade routes dominated by the West. One notable example of this shift is the New Development Bank. This was established by the BRICS nations as an alternative to the World Bank and the International Monetary Fund. The bank aims to finance infrastructure and sustainable development projects in emerging economies. This move is seen as a challenge to the existing global financial order. The growing economic clout of BRICS nations is giving them more leverage in international trade negotiations. They are using this leverage to advocate for fairer trade practices. This is especially true for developing countries. The BRICS bloc is emerging as a powerful voice for change in the global trading system. This is leading to a more multipolar and balanced world order.
Gold and silver have always held a special allure for people across the globe. This is particularly true in many BRICS nations. In India, for instance, gold is deeply intertwined with cultural and religious traditions. It is considered an auspicious metal and is an integral part of weddings and other celebrations. Similarly, in China, gold is seen as a symbol of wealth and prosperity. The demand for gold jewelry in these countries is immense and is a significant driver of global gold prices. Beyond cultural factors, investment demand for gold and silver is also on the rise in BRICS economies. As incomes rise, citizens are increasingly looking for investment opportunities to safeguard their wealth. Gold and silver, seen as safe haven assets, provide a hedge against inflation and economic uncertainty. This is particularly appealing in countries experiencing rapid economic growth and potential currency fluctuations. The demand for gold and silver extends beyond individual investors. Central banks in BRICS nations are also increasing their gold reserves. This is seen as a way to diversify their foreign exchange holdings and reduce their dependence on the US dollar. This trend of central bank gold buying further strengthens the case for a bullish outlook for precious metals, especially in light of the economic rise of BRICS nations.
Section 5. Challenging the dollar's dominance implications for precious metals. For decades, the US dollar has reigned supreme as the world's reserve currency. However, the rise of BRICS nations is challenging this dominance. These emerging economies are increasingly conducting trade in their own currencies. They are also establishing alternative payment systems that bypass the US dollar. This move away from the dollar is significant. It could have profound implications for the global financial system, including the future of precious metals. As BRICS nations reduce their reliance on the US dollar, they are likely to increase their holdings of other reserve assets. This includes gold. Gold has historically been viewed as a safe haven asset during times of geopolitical and economic uncertainty. As the global financial system becomes more multipolar and less reliant on the US dollar, gold could regain its luster as the ultimate store of value. The shift away from the dollar could also lead to a more fragmented global financial system. This could result in increased volatility in currency markets. This would further bolster the appeal of gold and silver as safe haven assets. In this evolving landscape, precious metals are well positioned to benefit from the ongoing shift in global economic power.
Section 6. Expert Opinions: BRICS and the Future of Gold and Silver. The growing influence of BRICS nations on the global economy and their impact on precious metals has not gone unnoticed by experts. Many analysts believe that the rise of BRICS will continue to be a supportive factor for gold and silver prices in the coming years.
The demand for gold from BRICS nations, particularly China and India, is only going to increase as their economies grow and their citizens become wealthier,
says renowned economist Jim Rickards. Other experts point to the role of central banks in driving the demand for gold.
Central banks are increasingly looking to diversify their reserves away from the US dollar. Gold, with its historical track record as a store of value, is a natural choice for central banks looking to hedge against geopolitical and economic risks.
The consensus among experts is clear. BRICS nations are a force to be reckoned with in the global economy. Their influence on precious metals markets is likely to grow stronger in the coming years. Investors and analysts alike are keeping a close eye on developments in these emerging economies. They are adjusting their investment strategies accordingly.
Section 7. Projecting Precious Metals. Prices. The BRICS effect. Projecting future prices of any asset class is inherently complex and subject to numerous variables. However, when considering the potential impact of BRICS nations on gold and silver prices, several factors suggest a bullish outlook. The continued economic growth of these nations, coupled with rising incomes and cultural affinity for precious metals, will likely sustain and potentially increase demand. Furthermore, the ongoing de-dollarization efforts and the desire to reduce reliance on the US dollar could lead to increased central bank buying of gold. This would provide further support for gold prices. While silver often follows gold's price trajectory, its industrial uses add another layer of complexity. Nevertheless, the overall positive sentiment surrounding precious metals, driven in part by BRICS's influence, is likely to benefit silver as well. It is important to note that several factors could influence precious metals prices in the opposite direction. These include unforeseen global economic slowdowns, a sudden shift in central bank policies, or a decrease in investor demand. Nevertheless, the long-term structural changes brought about by the rise of BRICS nations suggest that gold and silver are well positioned to weather potential storms and emerge as even more attractive assets in the future.
Section 8. Conclusion: BRICS nations, a catalyst for change in the precious metals market. The rise of BRICS nations is reshaping the global economic order. This is having a significant impact on precious metals markets. Their impressive economic growth, increasing purchasing power, cultural affinity for gold and silver, and efforts to challenge the dominance of the US dollar have all contributed to a bullish outlook for these metals. While predicting future prices with certainty is impossible, the long-term trends point to a continued upward trajectory for gold and silver prices. Investors, central banks, and policymakers are closely monitoring the developments in these emerging economies and their impact on the global financial system. The rise of BRICS is not merely an economic phenomenon, it is a geopolitical shift with far-reaching consequences. This includes the future of precious metals. As we navigate through this period of global transformation, understanding the dynamics between BRICS nations and precious metals will be crucial for investors and policymakers alike. The rise of BRICS is a testament to the shifting balance of power in the world. It is a trend that is likely to continue shaping the global economy for decades to come.